Is that better now? Maybe. I don't know why that's not working. That's a bit embarrassing. I don't know. Maybe that's a little bit better now. Perhaps. Let's see. Yeah, I don't know. It seems to be okay, I think. I hope. Yeah, it seems to be a bit better. So what was I saying? Yeah, let's do all of that introduction again. Why not? So what was I saying? I was saying that... welcome to the stream. I'm Michael Stark, Financial Content Lead, and here we're going to be analysing some instruments. We're looking at news that's happened recently, and also going to be looking ahead at things that are coming up. Hopefully the sound's better now. Yeah, it looks like it is. Okay, that's a relief. So, and also the risk warning. I'll obviously say the risk warning several more times, so that's fine. But remember, financial decisions, your own risk. This is just my opinion. This is just things that I see and I think about and some other rationale behind it, and that's it. Yeah, not recommending you to trade. So, we have Sashin GMR saying, I'm ready. That's great. Thanks very much for joining, Sashin. And CR7098 says, I'm from Bangladesh. Welcome on board, CR7098. Nemic24K Uganda on set. Welcome, Nemic. Thanks for joining the stream. And we have Diamond Killer from South Africa. Welcome, Diamond Killer. Thanks for joining us. Thapelo Telkabong mention on set from Gauteng. Welcome, Thapelo. Thanks for joining us. And then a few no sounds. Y Duty from Cape Town. Welcome on board. And hopefully the sound seems to be better now. That's good. And Joyce Gitao from Kenya is also joining. Welcome back, Joyce, one of our regular viewers. Thanks very much, Joyce. Great to see you every week or every 2 weeks when Andreas is here. It's always nice to have somebody coming back. That means hopefully that we're doing something right. Fingers crossed anyway. So if you have any questions, please, anybody, drop them in the chat at any point, and we will stop to answer the questions when we're going through the stream. So please go ahead and ask any questions that you might have. So here we are looking on the screen at Exness's personal area, and I would just remind you please that this is a demo account, so we're not doing any live trading here. None of this is advice. Everything here is on a demo account. Not recommending you to make any trades. And if you go to the left tab here of Exness's personal area, you can see firstly analyst views, which gives you some ideas for trades, basically signals from Trading Central. If you click on any of these, then you can see that they have a particular preference for a certain direction, whether it's buy or sell, and a little bit of the technical rationale behind that. And this is something that you can use, you can integrate with some caution probably into your own approach and your own ideas for trades. Market news we can also find under the sub-tab of analytics in Exness's personal area. We can see for most of the main instruments, primarily Forex and gold and oil, but also other instruments as well. We can get some of the latest news and some technical analysis from here. We can get all of that in one place. We can also get the link to the economic calendar from Exness, which, fairly recently has been updated. So now this economic calendar is significantly more functional, so that's definitely a good thing compared to what it used to be like. Also has quite a lot of historical data, so that's something that's certainly very useful. So these are some of the tools that we can use, we can integrate into our trading. So what we're looking at this week, the main thing, of course, is the war in the Gulf. The third Gulf War, some people are calling it, some people are calling it other things, of course. There's live news feeds and news coming out all the time on X and from various other sources about what's happening in the Gulf. And I mean, the kind of high-level summary from what I can see anyway right now is strategically we have something of a stalemate. In that we don't really have any very clear war aims from the USA and Israel on the one hand, apart from probably the change of the government of Iran in some significant way and surrendering of the nuclear material, which seems very, very unlikely that the Iranian government is going to do either of those things. And the demands from Iran for the end of the war is the withdrawal of all American bases in the Gulf unilaterally, which also seems extremely unlikely to happen. So strategically speaking, we have a stalemate, while militarily, of course, for the moment, we have overall dominance by Israel and the USA, but what they can actually do with this is a question. And most importantly, we have the Strait of Hormuz basically closed. Not entirely closed, not entirely blockaded, but basically closed. So that's why we have this situation on the chart of oil, which seems likely to continue for a while. And most of the other stuff recently has been essentially secondary to what's been happening in the Middle East. But I don't think we should ignore the other stuff entirely, and we're going to be talking about that a little bit. Primarily want to talk about central banks this week. So we have a no-name viewer saying, Mr. Michael, welcome back. What's your outlooks on gold? Thanks very much for the question, no-name viewer. Let's look at that briefly, and then we'll move on with what else we're going to talk about. So I would just stress here when I'm saying this is what I think about gold, it depends very much on what we're about to come on to in a second, which is the situation with central banks and specifically the Fed. In that you would expect in this situation, usually that gold would be going up at least somewhat because we have significant geopolitical risk. We have, of course, significant risk of stagflation based on what oil is doing and based on, obviously everybody's filled up their car recently and it's a bit more expensive than it used to be. So that's something that, of course, can drive inflation and also can cause significant problems for growth since price of everything is suddenly quite a lot higher as a result of oil. You would usually expect gold to be going up in that situation, but the central banks seem to be quite quick to react. So far, there's some evidence that they're likely to be quite quick to react, either by not cutting or in some cases by actually hiking or hiking more. We'll come on to that in a few minutes. And I think, the counterpoint to that is, technically speaking, I don't think it seems super likely to see a sustained decline by gold, because right now we're at a pretty important psychological area of around 5,000. So that's why I think it's probably going to be quite difficult for the price to break through there in a sustained way unless we get some kind of strong new fundamental catalyst. What could that be? Something from the war, most likely, but it's also, I think, entirely possible that we might get some situation occurring with the Fed tomorrow. It's, I think, quite possible to see the Fed surprising markets in some way in the press conference tomorrow. But for the moment, if I was having to make a trade, I'd probably be going with a buy for gold. This pending order that was set up maybe 2-3 weeks ago or something like that, I'm not sure that's now necessarily a great idea, because we can see that volatility has gone down quite significantly. It's still extremely high, I would stress, but relative to the historical norms, but it's gone down very significantly compared to what it had been on the daily chart end of January, early February, when we had that situation arising with the Fed and so on and so forth. Excuse me. So that's why, I think it probably seems a bit more likely for the price to go up. It probably isn't going to go much below 5,000 in a sustained way unless we get some kind of surprise from the Fed tomorrow. We should be talking about a little bit more. So I would probably favour buying a little bit more. I just might be maybe a little bit more conservative than I have been in past live streams with finding a target here. I would just stress that it's maybe difficult in this situation to find a reasonably good stop on this time frame because of volatility, although it's dropped from the highs, it's still really quite high. If we're going to be using the traditional or one of the traditional rules to find a stop of ATR times 1.5 or 2, then we need to set the stop really quite far away, which is not something we necessarily want to be doing. So if we go with ATR 1.5, then we probably need a stop of roughly about $195, which is really quite a lot. But it'd still be possible to have a target about 400 away. So let's see how that works. Remember, this is not a recommendation to trade. This is just for informational purposes about how I personally would approach setting stops and targets. This is just one possible way of doing it. This is not real. It's not a real trade. And so the ratio here is okay, but I think for a swing trade, it's certainly not fantastic. And obviously on this account, I think it would be more or less impossible to do this based on usual risk rules. Because you see what we've got in terms of stop. We've got like about $200, more than $200 potential loss, and the account's only about $200. It's a demo account, I would stress. It's not a live account. So, it would seem to be like kind of obvious to me, at least, that we need to try to step the stop closer. But on this time frame, we don't really, in my opinion, we don't really have an obvious opportunity to do that. So one potential thing that we could do would be just set it a little bit higher and, not try to trade on that time frame. Try to capture something a little bit closer on a lower time frame. So let's go with about 5,120. And that still gives us a reasonable potential profit, and that means that we can just cut the loss a little bit compared to what it might have been otherwise if you're trading on the daily chart. And I would just stress, obviously, we do get a better ratio here, but of course this stop I think is significantly more likely to be triggered, because from the price of entry that's only about 60-ish. So it's okay actually on this time frame. That's approximately 3 times ATR. But if you're trading on the daily chart, remember, not a recommendation, that's just one possibility for how one might do it. If you're trading on the daily chart, it's very difficult to find a reasonably good stop without losing a lot of money from the account. I think that's the main challenge really here. No name viewer, I think that's the main challenge really here with trading gold right now. Yeah. So no name viewer adds macros are pressing gold down, yet COT data shows institutions on bullish positions. It's confusing. Yes, that's right. It is confusing. I would say markets are often confusing. We often have some kind of confusing situation. And yes, macros are pressing gold down to some degree, but I think I'm also thinking here about what was the prior overall summary fundamentals of gold before we had this situation happening with the war in the Gulf. Overall, I think pretty positive. And what was the point that I wanted to make here? I don't think I necessarily want to make a point here. COTD shows institutions on bullish positions. Yes, it does. Does show that. But I think I would stress no name viewer, this is just my opinion. My opinion isn't necessarily more valid than yours. I don't think necessarily that the institutions are much more bullish than they usually are. It depends obviously on the time frame, what time frame you're considering. But if we're considering this time frame over the course of the last several years, institutions I think are broadly significantly less bullish than they have been on average over the last several years. Obviously it's not looking super negative by any means, as COT, but I'm not sure we can get a clear signal out of this. I would stress it's just my opinion, no name viewer. So, one of the things that I'm really thinking about there is just what's the overall previous condition, at least, of monetary policy. And what's my reason for buying gold? On this particular time frame, overall, I think we have an uptrend. There's no evidence that it's ended yet. In that, compared to, I wouldn't necessarily discount, I would just consider a bit less seriously this situation that we had in late January and early February. I wouldn't exclude it from trying to analyse the trend. It's just something that I would not necessarily focus on particularly. And overall, there doesn't seem to be very much demand to push a lot lower. That's just what I think that we can see now. There doesn't seem to be that much demand to push it lower. And I think also it's kind of questionable, what is it that pushes it down below 5,000? Possibly it could be the Fed's meeting tomorrow, yes. But I would stress it's just my opinion. Might well be wrong there. My personal take, I would stress again, it's just my opinion. My personal take would be I would just not trade this right now. I just wouldn't make this trade for gold right now if I had an opportunity. I would just wait until after this has happened. I would wait until after the Fed's decision tomorrow and then see what the direction is going to be like then and then trade it. Because a lot, I think, rides on the Fed's press conference. It depends really on what they actually say, and I think it depends also on how it's interpreted by traders. I'm not sure it's necessarily great for me, at least, to be looking for a trade before the Fed's press conference like that. But it's just one possible way of doing it. So that's just my opinion, and hopefully that to some degree answers your question, no name viewer. You have something else specific, please let us know, and we could certainly come back to it shortly. Diamond Killer says, today gold is confusing, sir. Yeah, gold is often confusing many days. It depends to some degree on what time frame you're trading, and I think also, right now, The American session still isn't going to open for a little while, so possibly we get some more clarity once the American session opens. And I think also, Diamond Killer, one factor there, not the only factor, but one factor is when you've got the Fed's meeting coming up the next day, you usually expect the direction to be a bit more confused, because a lot of people are going to be avoiding making any large positions. They're going to be avoiding getting committed. And if people are in profit in either direction, then they're probably more likely to be taking the profits when you've got the Fed coming up the next day. So you would usually expect volume to be lower in the run-up to this kind of event. So that's part of the reason I think that we have some confusion there. Radical Z5006 says, I am here, Abuja, Nigeria. Welcome on board, Radical Z5006. Thanks for joining. And Thapello asks for S&P 500. Yeah, we'll get to that in a minute. But I just want to briefly look through some of these central banks before we move on to indices. We'll look at indices shortly, right? So this is a really big week for central banks. One of the biggest weeks we've had in actually a long time for central banks, in that we have a total of 6 meeting. And we've already had the Reserve Bank of Australia, which has hiked rates as pretty universally expected earlier this morning. We've got coming up, most importantly, the Fed tomorrow. We've also got the Bank of Canada tomorrow, Bank of Japan and the Bank of England and the European Central Bank. So 6 of the traditionally most important ones. Only one of the major ones for us as traders not meeting is People's Bank of China. So we want to, I think, have some kind of focus on the press conferences to see what's going on in these, and also to have some idea of how traders are actually reacting to them. And in my view, not try to make any, or certainly not too many, long-term trades for instruments that's likely to be affected in the run-up to the meetings. Because it's very, very likely, I think, that there's going to be some reference in all of the statements and press conferences to the conflict in the Gulf. There's going to be some reference, I think, in pretty much all of them to this and what's happening with crude oil and how that's likely to impact inflation, because the impact on inflation across all these different countries is quite likely to be different, in that you would expect probably the impact on Canada and the USA is going to be relatively lower, because both of them are very major producers of crude oil, right? Whereas for Japan, it's likely to have a significantly bigger impact, this higher price of oil, because Japan produces a trivial amount of oil. And the same for the Eurozone, and I think similar, but to a lesser extent somewhat, for Britain also. Britain does produce some oil, but not very much. So these are factors that I think we should try to consider. And we want to try to, I think, not forget about underlying economic conditions. In that going into this, going into the war and going into the situation currently for crude oil, the overall direction of inflation is pretty different across various different countries. In Britain, it's still really quite high. It has come down a bit compared to around last summer. It's come down a bit, that's true, but it's still really quite high. Compared to, for example, in the Eurozone, it seems to be under control. Recently it rose last time, but overall inflation seems to be under control. So any expectations for the ECB to hike rates later this year probably is going to be more of a preventative measure than a reactive one, whereas the Bank of England, now significantly less likely to be doing any cuts, that's more of a reactive measure, it seems, at least. Because if you were here last month, then you remember, of course, talking about it seemed to be more or less guaranteed that this Thursday, after 2 days, we're going to get a cut from the Bank of England, given that we had a significantly smaller majority in favour of a hold last month. A majority of only 1 vote on the Monetary Policy Committee, and we'd be expecting a majority of probably 3, or possibly more than that. So that's why... that's why it had seemed like Bank of England was definitely going to cut rates, whereas now that seems a lot less likely. It seems to be very, very unlikely now that there's going to be a cut this month, and possibly there's not going to be a cut next month either. There's something we want to watch. So possibly, I think one of the biggest intrigues comes from the Bank of England, but I mean there's also certainly some intrigue, I think, in the comments from the Bank of Canada about overall economic conditions Recently, we've had some pretty weak job data from Canada. And we also, I think, certainly want to watch any possible indications from the European Central Bank. Are they going to be hiking the rates? And from the Fed, any indications about how much the price of oil might have an impact on inflation. So want to focus, I think, on all of these. And let's look briefly at earnings. There's nothing really very major coming up for earnings soon. So I don't think we're particularly, or I'm not at least particularly focusing on indices, but we'll certainly look at some indices. We'll certainly look at the S&P 500. Who was it who asked about that? Yeah, Thapello. Mr. Thapello, yes, let's definitely look at the S&P 500. So one of the things that people often say in this kind of situation where we have, some degree of panic and nervousness in markets, let's buy the dip. And I think it's kind of questionable. I don't know we have to zoom out a fair amount, but let's just zoom out a fair amount. I think it's very, very questionable whether we really have a dip. I mean, it depends on your frame of reference, what's a dip and what's not a dip. But since overall, compared to recent highs, it's down less than 10%. It's kind of questionable to think to what extent this presents us with a great buying opportunity. Of course, for a relatively shorter term trader of CFDs, it can potentially provide you a buying opportunity, of course. But the risk, I think, with that is if this situation in the Gulf continues for a long time and there's no evidence of ships managing to make it through in any significant numbers, and we know that the replacement pipelines they're not going to be able to meet even half of the previous capacity. Can we get that chart up? Let's see if we can find that chart. Just give me a second because I actually wanted to show that chart. I was going to talk about that previously, but no, not that one. Sorry. So two main pipelines that we're looking at is the Petroline, which is one on the left, Abu Yanbu is also known as, and Abu Dhabi crude oil pipeline, which leads to Fujairah in the Indian Ocean past the Strait of Hormuz. These can only handle a bit less than half of the daily supply of oil. So that's something that's quite important. There's not going to be much replacement. But equally, I think that the USA probably stands to lose a little bit less from high prices of oil compared to various other countries. Primarily because USA is in recent years an overall net exporter of oil. Whereas previously in the past, we're used to one of the previous major oil crises in the 1970s. Of course, America was a massive net importer of oil. This is before shale, this is before various new fields in Alaska have been discovered, so on and so forth. So, it's less vulnerable because I think, and one way to illustrate that, of course, I'm stressed this is not the only factor, but this is, I think, one factor that's driving on the chart of the FTSE. You can see this happening, this is a dip, sure. Okay, that's a dip. Fine. Yes, accepted. Right. Whereas when you see this happening on the chart of S&P 500, I think it's just kind of maybe more questionable about whether it's really a good dip. But I think it's something that we could possibly try buying. Why would I buy? One of the main reasons is that I just don't see any pressing fundamental reason for it to decline very much more compared to the other indices. And also the fact that overall, over time, shares go up. That's a very simplistic, of course, attitude, but I think it is broadly correct. So one thing that I could do in this situation would be just set the target around the recent all-time high. Don't make a lot of money by doing that, and then set the stop somewhere around a possible new low with some room for the price to move. Doesn't give us a great ratio. Maybe can move the stop up a little bit there. I know obviously can't do that. That's not fantastic by any means. Let's go with 6,550. So it's okay, a reasonably good ratio. Just obviously need to be aware of the fact that if I was making that as a real trade, which I'm not, this is a demo account, but if I was making that as a real trade, I'd be aware that, okay, it's very, very likely to hit the stop of that trade because it might well just move slightly beyond this area here. It's not the broker hunting my stop or something like that. It's just this is the way markets move. They often don't exactly respect what we think might be a potential support. A potential support is not a specific area, specific level, sorry. It's an area, it's a zone, right? So that's one potential option. I mean, I think if you were wanting to sell, you're looking for a sell for the S&P 500, I personally think you might want the price to be a bit higher. Or maybe I might want, less of an indication that we're close to selling saturation. And I think also, hopefully last point on that for the moment. Why did I close that? That's silly. Last point on this for the moment. I think I would probably prefer to wait until we have, maybe not a full-on earnings season, but, some more important earnings. Because this month, we had some at the start, that's true, but towards the end of this month, we don't really have any very significant earnings for the S&P 500. And we're going to start, as usual, with the banks, among the main ones anyway. We're going to start with the banks from around the middle of next month. So I would just wait till after Easter. If I was, looking for a sell. And the kind of rationale behind that, in a simplistic way, would be like if these earnings are a lot worse, then that's possibly adding fuel. Just the obvious issue with that is what's going to happen with this in that time. There are these various different factors you need to consider. But I would just say, in my opinion, Thapello, thanks for the question, thanks for requesting an instrument. In my opinion, it probably looks more like a buy for right now until we can find a better rationale. Yeah. So Thapello Taukobong says, we did that already. Yeah, thanks, Mr. Thapello, for the question. And Saint Nicole Wagon G Istanbul here. Okay, thanks for joining. Y Juicy says short-term first target 5,063, long-term target 3,500. Could you touch on your USO? Yeah. What? Yeah. Okay, could you touch on US oil? Yes, we can touch on US oil. So, yes, of course, we'll touch on oil quite a fair amount. A current situation, of course, we've described in very brief detail here, is where were we? Yeah, this choke point, and the ships can't get through. Doesn't look likely that the ships are going to get through anytime soon, and they can't replace most of the supply through the pipelines. So this is one of the primary issues. Can the USA significantly increase production? Let's talk about that just very briefly, and then we'll go back to something else. Or if you want to talk about something else. So US crude oil, is it going to give me more one? Maybe. Let's see, maybe. Yes. And basically, I discussed in an article a while back how I think there's probably some evidence that the Americans probably can pump more if they want to. I don't think they can pump a lot more, but I think they probably can pump a bit more if they want to. So that's one factor. But I would stress that obviously any data on crude oil production from pretty much any country, they lag. Right, from America, they lag. They just don't lag quite as horribly necessarily as from other countries. Whereas if you go to Russian crude oil production, and just bear with me for a minute here, then it lags terribly. It lags even more. And between us, this is horribly unreliable in wartime. It's not to say that it's wrong. Yeah, I'm not saying that it's wrong or it's fabricated or a lie or something like that. I'm not saying that. I'm just saying that this is often revised a lot up and down. And it's also, to me at least, it's often not really very clear what is the methodology that they're using to actually do these revisions and produce these statistics, and how much of the oil is actually declared, right? This is a separate topic which we don't need to get into in a live stream, of course. But I think that there is probably some capacity for Russia to pump more oil. So maybe the situation, I think, is not quite as desperate and end of the world, $200 plus barrel of oil anytime soon. But certainly I think the longer the crisis continues, the longer the Strait of Hormuz is effectively blocked, then the more the oil has capacity to rise, in short, in summary. But when we look at it from a technical perspective, of course, similar situation, I think, to gold, in that volatility relative to what we had been accustomed to for quite a long time, volatility is extremely, extremely high based on ATR. So, swing trading for oil in this situation is maybe not the best approach, perhaps.
And I think just a kind of like brief summary of the technical situation. Don't have any obvious overbought from the slow stochastic, so that's positive. That's a good thing for us as buyers. And I mean, possibly the fact that this gap has been closed can be played down a little bit compared to what we might expect in some other situations. Because like initially when we had the initial gap around the start of the war, and I was expecting it would be closed. I didn't think that it would last for this long based on, what happened last year. We remember the 12-day war last year, no straits closed, and it lasted for 12 days. And currently this one has lasted for more than that already and doesn't show any signs of stopping or slowing down significantly. So there's all of these factors, I think, to consider. Whereas overall, just when you have, I think, the kind of simple approach in this situation, and when you have these kind of big gaps, while being aware of the news, we probably want to trade in the direction of the gap. If we really have to force a trade here, I just don't think I would do it, as I was saying before with gold. I just think it's a terrible idea to do it on this time frame. Excuse me, with the appropriate stop set for this daily chart, because you're just going to lose. I personally, at least, would lose too much money trying to trade on this kind of chart, and it's also going to be really, really difficult to find potentially good stop. Because where would I set a stop around here? I mean, taking a fairly simplistic approach, wanting to try to like capture the majority of these tails here, right? Probably somewhere in the area of around 81.50. So let's say we set the stop at 81.50, right? And losing $140 on a micro lot of crude oil when your demo account is $200 doesn't work. Lots of different reasons that obviously does not work. So as for gold, I would stress, it's just my opinion, I would probably go for a lower time frame. And I know we can't do it on Exness's platform, but you have access to MT5 as well. Just trade in the latest direction using a reasonably far away trading stop. Simplistic technique, but sometimes simple is good. Simple can work. So, I mean, in the current situation right now, if we're looking at the hourly chart, probably the best thing to do, I think, would be to wait until we get a fairly significant new high and then just sell that high for a while, right? And then once there's some evidence that the price is bouncing from a low, then buy in from that low. I would stress, of course, that's a very simplistic technique, but it's something that can work in this situation if we really are determined to trade this. And right now, I would also stress that although usually in this situation we might not put too much emphasis on saturation indicators, I know some people don't really like saturation indicators. That's fine. If you don't like saturation indicators, of course, don't use them. But in my experience on this kind of time frame, slow stochastic can actually be really useful, because when we see a downward crossover in overbought particularly, that can often lead by quite a lot. That's the caveat there. It can lead the actual movement by quite a lot, but it's often pretty reliable, assuming you see some kind of support, some kind of backup from a pattern or from other indicators or from whatever else is you want to use. Like this one here, for example, from Sunday night, right? We've got the opening with 3 black crows. Some people also call it downward 3 soldiers. There's other names for it. The pattern where you get 3 fairly large down candlesticks in succession. It's not a perfect example of it, but it's fairly close. And we also have, in the middle period, downward crossover of the slow stochastic, pretty close to overbought. Then that kind of situation, I think, can give us a pretty good opportunity to sell in. And vice versa. The opposite also, if you have upward 3 soldiers or whatever you want to call it, like 3 bars up or whatever, loads of different names people call this pattern, but this looks something like this. We have 3 consecutive fairly large candlesticks going up, and if we also get a upward crossover of the slow stochastic, not necessarily within oversold, but I mean within, like below neutral anyway, then that often can give more confidence, I think, to that approach. I would stress this very basic approach. Who asked that question? YGT is very basic approach, like really simplistic, but sometimes simple is good, and simple I think sometimes can work. Just need to be aware that obviously the hit rate for this kind of approach is not going to be 100%. Hit rate is never going to be 100% for any kind of approach that you might use. So just kind of bear with it and try to use reasonably tight trailing stop in that situation. I find that this approach can work. So hopefully that answers your question to some degree, YGT. I mean, that's kind of like how I would approach it. So, I mean, right now, how would we apply that right now? Excuse me. Oh, my throat's killing me today, man. Then basically right now, the slow stochastic is about to do a crossover, but it hasn't actually done it yet. I don't think we have any obvious backing from candlesticks. This does look like an engulfing pattern. This certainly does look in a downward engulfing pattern, and it's currently 9:37 server time. So we've only got like basically another 20 minutes, slightly more, for this to retrace significantly upward. I think I would go for it. I mean, I would just stress this is not a recommendation to trade. It's just one possibility, and like try to set a target around the nearest low. So that's be the area of around 92.20 ish. I would stress, and then the stop I think would be somewhere around an area that was previously a wick. So maybe that's going to be a little bit too high, but let's try it. 97.45. 97.45. Yeah, that's not great for a variety of different reasons. It's not fantastic, but it's okay. I mean, it's something that I can work with. And on this account, obviously, like I would not do that. You know, you can't on an account of $200, you can't really lose $20 in one trade because it's going to end up burnt out pretty quickly. But remember, this is just a demo account. This is just for informational purposes. That's how I would approach it. What am I missing here? And this is the key point. This is the crux. What am I missing here? I'm missing a trailing stop. Without a trailing stop on this platform, this approach is basically useless. It's not totally useless, it's basically useless, in my opinion. I know also that some people don't like trailing stops. That's fine. If you don't like a trailing stop, don't use it. But I think in this situation, trailing stop is super helpful. It's really helpful. Just so you don't have to sit here like, you know, frantically biting your nails, you know, smoking, doing whatever it is you do when you're nervous, and then like watching the price like move around like frantically. No, you can set it, leave the platform open, go and do whatever. And then, you know, once it moves, eventually it's almost certainly going to move into profit. It's not, it just might not hold there until you get to that kind of target. Then the trailing stop locks that in for you. I think it's very helpful in this situation. But of course, I would stress, that's just my opinion, it's not a recommendation to do anything. You need to do your own research. You need to test this kind of strategy, this kind of, I wouldn't call it a strategy. You need to test this kind of approach on a demo account and see, does it work for you? Can you do this? Can you make this work? Yeah. And if the answer is no, of course, don't do it, you know. So YGT says, thanks for intake. Yeah, thanks very much for the question, YGT. That's a good question. Thank you. Really appreciate to have questions. Lots of questions today. That's good. That's great. Lebohang Anthony, sorry, I can't pronounce the last part of your name properly, but Lebohang Anthony says, hello, I'm here, Hobhouse Free State in South Africa. I'm interested in working. I'm ready to see market trading pound. Yeah, well, we can certainly analyse the pound. Yeah, no problem. Well, let's firstly look at cable. Let's close that for a second. Let's look at cable. And I mean, this is just my opinion, but I think that there's maybe potential for further buying of the dollar on the basis of a political haven, not so much an economic haven, because the traditional economic havens, the dollar to some extent can function as an economic haven, but I'm thinking primarily about franc and yen. And I mean, latterly, yen has definitely not been doing great by any means. And the franc has been doing kind of okay, hasn't really lost as much ground as some other currencies have, but has certainly lost ground against the dollar recently, like since the start of the Gulf War, right? So that's why I'm thinking there's possibly potential for that to keep going. And probably I would say that the pound might be a better option for doing that compared to euro dollar, because euro dollar, if we zoom out here a little bit, we're at quite a significant new low. new low of something like, I don't know, 7-8 months, something like that, approximately. So it's kind of questionable whether the price pushes lower immediately than that. Whereas the pound, it's a low of only a few months, low of much less long. Right, so I think that there's potential for cable to continue a bit lower. And it's still quite a while before we get to any very significant psychological area. And I think there's some evidence, this is a matter of opinion, I would stress, it's just my opinion, there's some evidence that the economic situation as a result of price of oil and the war is probably going to hit the UK harder than the USA. Just because of relative to the total amount of consumption, imports and exports, Britain needs to import a lot more oil than the USA does. So that's one of the important factors. Although, of course, oil is a market, the price of oil will change. If the price of oil is going up generally, then it's also going to go up in the USA, of course. It's just probably going to go up less, relatively speaking, compared to Britain. So anyway, all these reasons are why I think there might be some potential for a swing trade for selling cable. As for setting a fairly realistic target, that is, of course, harder. It's harder to find a vaguely realistic target. But I mean, I think this works as a kind of I was just stressed for informational purposes only. This in broad concept works. Could we fiddle a bit more with the areas? Yes, I think we certainly could fiddle a bit more with the areas. If we wanted to play it a little bit safer, we might set the target around 130.5, and then that way we're actually inside the candlesticks from early November last year. That might work. The only, or not the only, but one of the questions here is we're fairly close to selling saturation. Fairly close to oversold. So that's one potential question. And I mean, I would just say, same caveat, who is asking about this, Label Hang Anthony, same caveat that we have for many other instruments is, look, we've got the Fed and then we've got the Bank of England meeting on consecutive days, right? So just wait until after that's done. In my opinion, that's what I would do, is I would just wait until after at least the Fed has had the press conference and we have some indication of what is the direction, what's the results of this, what's going to happen next. I was stressed, it's just my opinion. And just briefly before, because I do want to cover FedWatch a little bit. I know we've got a lot of questions. We will talk about the questions, but I just want to briefly cover a couple of other things before we come on to more questions, because I know we're starting to run out of time soonish. Maybe it's also an option to buy the pound against the yen. In that recently, in pretty much all of its pairs, the yen has not done great. I mean, it's more or less flat against the euro, that's true. Euro didn't continue upwards, but I mean, I think there's some obvious explanation for that. What happened with the war. To some extent, the ancient yen has functioned as a haven. And for dollar yen, we have quite a significant risk here, because 160 yens is the area where I think we're probably expecting some sort of intervention from the Bank of Japan if it holds around there for a while. So I think it's very questionable dollar yen, whereas pound yen, maybe that's one possible candidate for buying, because there's a little bit at least of space from where we are to the previous highs. And I think it's maybe possible that the pound could overall strengthen and looking a bit further ahead. So, I mean, that's one possible option for pound. But, I mean, I think the main thing for the pound right now would be probably to sell against US dollar, but very much depends, I think, very much depends on what the central banks are going to be talking about. Yeah. St. Nicole says, just entered a buy on gold. Who else is on that? None of our business, to be blunt. Let's not advise each other about what to trade or how. I mean, we can express our opinion, but please let's not advise each other what to trade or how. I put this in on a demo account. I would stress it's a demo account. It's not a live account, just for informational purposes to help you understand something about the rationale of how I would make this decision if this was a real account. Yeah. So thanks very much for your contribution, for your input, but let's not advise each other. Yeah, let's not encourage each other without some kind of rationale or explanation there. Yeah, let's all do our own research a little bit. But thanks very much for your input, St. Nicole. Librahang Antley says, how are but to start 5,000? That is really to build life. I don't know. I'm not sure what you mean, Librahang Anthony. If you can explain what you mean here, that would be great. If this is a question, you explain what you mean that you want me to answer. Please explain a little bit more, right? Nemic 24K says, guys, gold is selling. Yeah, that's a legitimate opinion. That's a totally legitimate opinion. It depends really on what time frame you're looking at. I mean, if you're looking at 1 minute charts, well, I mean, there's not really a whole lot of point in analysing that, so let's not do that. But if we're looking at like half-hour charts or a bit higher, I mean, I think it's kind of questionable whether we're going to get an extended move much below 5,000 for the reasons that we're talking about previously. Yeah. And Nizam Allah says, what about gold? Yeah, that's what we said. Welcome back, Mr. Nizam. Presumably the same Mr. Nizam, I think. In which case, welcome back. Or a different Mr. Nizam, then welcome to the stream. What about gold? Yeah, as we were saying earlier, let's just briefly summarise. I think, considering the overall kind of fundamental context, you would probably, I think in many situations, expect gold to be going a bit higher. What's one of the reasons that it's not, I think, is what's currently expected for the Fed. Because previously, if you were here, like last week, Andreas was probably talking about this, and also 2 weeks ago and previously, we had been expecting that the Fed was very likely to cut in July, if not necessarily June. And that had been progressively pushed back, and now it's pushed back further. First time we have like a reasonably clear majority, although small, expecting at least one cut is now October. And I think it seems to be increasingly unlikely that we're going to get 2 cuts this year. 2 or more cuts is now a fairly small minority position. I mean, obviously right now we're in March and the end of the year is December. So it's quite far ahead to try to predict monetary policy. But I mean, I think we can work with what we see now. It seems less likely to get a more dovish scenario from the Fed. So I think that's one of the factors that has recently limited some gains for gold. And I think probably another factor is that the dollar has done quite a lot better recently, given that it seems like the dollar is functioning as politically a haven in this kind of in the current war, in this current situation of uncertainty. Dollar seems to be functioning better as a haven compared to the franc, compared to the yen. So these are some of the important factors. And I mean, overall, why do I still, despite all of this stuff, why would I probably still favour buying if I had to do something? It would just be overall, I don't think we have a downtrend. I think we overall have an uptrend. And I think probably based on, recent volume, overall, right, volume, and also based on this psychological area, likely psychological area, anyway, around 5,000, and overall declining volatility, although it's still very high, I think we probably need some kind of significant new catalyst to push much below $5,000. And I'm not thinking here about very low time frames. I'm thinking primarily about hourly charts and higher. But of course, the caveat is very difficult on the daily chart to find a reasonably good stop that doesn't lose too much money. So swing trading, position trading, maybe for me is not that favourable right now. And I think caveat number 2 is I personally just would not trade gold the day before the Fed. Just wouldn't do that. I just wait till we get some kind of reasonably clear result from the Fed and some kind of clear narrative-ish emerging from the press conference, then see, how we're going to take this. Because if we get Jerome Powell coming up tomorrow night and he says something about, like, we don't expect inflation to rise hugely, we're probably going to continue on more or less a similar sort of trajectory, and we're going to be cutting rates at a similar sort of rate, then you would probably expect gold to make some gains. Whereas if he comes and he says, like, oh, actually, Donald Trump's right, we need to slash the rates as soon as possible, I don't think that's likely to happen. But if that does happen, then you would expect gold probably is going to skyrocket, at least in the short term. And also the opposite, if he says the opposite things in the other direction, or possibly if he even signals a hike, if he signals a potential hike this year, which currently nobody is expecting, I would stress, no one is expecting that. But if he were to signal that, then you would probably see gold tank, at least in the short term. So it all depends on this. I mean, obviously some scenarios are a lot more likely than others, let's say, right? But still, the unlikely scenarios can still happen. Fed doesn't like to surprise traders, but in this kind of situation of the war, then, it's going to happen. There's going to be surprises. Yeah? So that's why, I'm just not mad on the idea at all of forcing a trade for gold day before the Fed. So hopefully that answers your question to some degree, Mr. Nizam. Nizamullah says, I'm new in the market. I have predicted market. It works perfectly, but I can't fix proper take profit and stop loss. How can I build it? Well, in my opinion, I think you can find it based on potential technical areas, and you can combine targets and stops to make sure that the loss from any trade can never be bigger than the potential profit from the same trade. I mean, that's pretty basic, but I think it's something that's important to remember, That's why, if you've watched, like Mr. Nizam, through what we've been doing so far, I'm not taking any trade which has a negative ratio. And I mean, where possible, if I'm doing a swing trade, it needs to be at least 1 to 2 risk to reward. Preferably should be 1 to 3 or higher. Current conditions, that's a little bit difficult to do. I mean, I think if you want to, we can discuss this a little bit. I think for Bitcoin, we possibly can get a good ratio. Just it's a little bit vulnerable around central banks meeting. But I mean, it's relatively, I think, one of the less vulnerable instruments right now, Bitcoin, compared to various others that we've been looking at so far. Can I have my grid back here? Yes, I can have my grid back here. So yeah, I think that's one potential option. But anyway, yeah. I think basically we consider like support and resistance from the point of view. We consider stops and targets from the point of view of support and resistance. I think not a fixed number of pips or a fixed amount of dollars or anything like that. We consider, okay, where has been a previous area where we've seen the price reverse or we've seen the price hold for a little while before breaking through or something like that, then there's a potential candidate for support or resistance. And usually, in kind of conventional, inverted commas, technical analysis, then we usually need to have 3 tests of a support or resistance for it to be confirmed as a support or resistance, right? But I think we can consider something to be a candidate if we have a reasonably round number, like this area, like roughly around 5,400 is a fairly round number. And we also have a fairly clear retracement after a test of that area that looks like a possible resistance, right? And same with the all-time high. I mean, the all-time high, I think by default is going to be a potential resistance, but not confirmed. And then we use this, and the same in reverse applies for supports. And we use these as long as they don't use too much of a percentage of the account to find the stop and the target. That works for me, and it has done for quite a number of years. So maybe it would work for you too. But I would just stress test it, Mr. Nizam. Don't just take my word for it. I don't necessarily know more about you. I certainly don't know more about you, about your strategy. Your strategy is yours. So I think you should test, anything that I'm saying. Research it. Don't just take my word for it. I can have an opinion. Everybody's got an opinion. Some opinions are better than others. Some opinions are more valid than others. So hopefully that helps. I mean, that's my approach, to try to use potential support and resistance and not lose too much of a percentage of the account and use a positive ratio. And I think with some adaptations, that works for pretty much all of the traders that I know personally. But in some cases, you might need to adapt it more. You might need to make it more complicated. You might need to make it less complicated. Maybe depends on what the rest of your strategy is like. So thanks very much, everybody, for the questions. Oh, there's a lot of questions today. But that's great. It's good to have questions. And if you have any more questions, please by all means ask. I mean, we're coming to the end of the allotted time, but we can certainly answer more questions if anybody has more. So what I want to do briefly now is I want to talk about live streaming in general. When is Kojo going to be here? I don't know. Kojo actually hasn't been here for a while, so I'm not sure when Kojo is going to be here again. I meant to talk to social media about that, but I actually didn't get around to it, I'm afraid. Sorry. But for next time, I'll try to talk to him about when Kojo's going to be here again. Yeah. And But I mean, what you can do to know immediately is you subscribe. I mean, don't put on all notifications because you're going to be going crazy, I imagine. Put on personalized notifications, and then you're notified whenever there's a new live stream. And especially if it's Kojo, you should get the notification on the top of the phone. You can just pull down. You can see, okay, it's Kojo. Right, let's join Kojo's stream, and let's ask questions of Kojo, and so on and so forth. And also here on YouTube, I think it's good if you're interested. You watch a series of podcast trading talks. Currently, we've got a series about AI, which I think is actually quite a lot of fun. Stan is actually very experienced in using AI for trading, so maybe you can learn something there. And also, it's an interesting discussion. And Trade of the Week. Recently, it's been mostly Stan, and we're on about 76% hit rate for that, so you can follow that. Remember, these are not signals; these are just ideas for trades. So stay tuned. This week's Trade of the Week should be coming out either later today or more likely tomorrow with Andreas. So that's something you can watch if you want to get a reasonably, I think, good idea with a proven track record that these overall work. You can also follow me on Twitter, X, formerly known as Twitter, which is at mstarkexness, if you want to get the latest on various different things. And you can follow some of my colleagues. Yeah, so there's my immediate colleagues such as Andreas and Stan, and there's also the financial market strategists. There's the trading trainers that you can follow on X. And they have various different opinions about things, analysis and so on and so forth that gets shared. So please follow us, engage with us, reply to us, criticize us if you want, of course. So gold is money, as we're nearly at the end, but let's just cover the rest of the questions. If you have any more questions, please by all means go ahead. Right, gold is money 7345 says Dow US 30. Yeah, let's cover the Dow. I mean, basically, obviously, sorry. Excuse me. Basically, I'm not sure the situation really for the Dow is like radically different from what it is for many other indices. Of course, this looks like more of a dip than the S&P 500. Yes, definitely. But I think the overall situation is not necessarily all that different from many of the other indices. Many of the key points apply in that America is probably less vulnerable to big spike in the price of oil compared to various other countries. That's point one, right? Point two, I think a lot really depends on what is the outlook for monetary policy. We've got the Fed's meeting coming up tomorrow. So I think a lot depends on that and what Jerome Powell is actually saying. What kind of questions does he get asked? Does he look confident? What does the statement say about inflation? What does the statement say about the overall situation for the job market, which has been recently at least a little bit better? We haven't mentioned that at all in this stream. We've run out of time now. But that's okay. We'll talk about the job market next time. All of these other factors I think are quite important. But broadly, it just seems to be like very questionable, like whether it's a great idea to be jumping in to sell now, given that, okay, oversold, not super important necessarily for an index, but if I were going to be selling, I'd probably prefer the price to be a little bit higher. But then I'm not sure I would necessarily want to do it with a pending order, because if we're going back to the 20 SMA, which is this white line here, well, what's to say that we're not going all the way back to the 50 SMA and then we get stuck in a crap trade for a while? Because lots of different things going on here, right? Of course. But, higher price of oil for many of the constituents of this specific index of the Dow is potentially a good thing, because it can mean more profits for, supermarkets, for energy companies that retail. Then, of course, they can make more profits potentially in that situation. If the prices are already going up, they just pad it a little bit. And a little bit more than they would have previously, because everybody already knows the prices are going to be going up if they haven't done so already, and then they could potentially make more money. That is, kind of one very simplistic approach to it. Whereas technically, I think it's kind of ambiguous. Why do I think it's kind of ambiguous? Because I'm not sure whether it's a very clear break yet below the 200 SMA. That's one factor, and also oversold is one factor too, I think. And I think in the context, I'm not really sure that a death cross of the 20 and 50 SMAs is a very reliable signal, because it doesn't lag quite as much as some of the other death crosses will do. If we get a death cross of the 100 and 200 SMAs, then I think we've got a pretty established and possibly exhausted downtrend in some situations anyway. So, I mean, maybe wait for a death cross of the 50 and 100 SMAs is one possibility, and then a bounce, and then look for a place to sell in when it's not oversold. That's one possible option. But for me, I mean, I just wouldn't really be looking that closely at this. Probably, as I was saying earlier, who asked that, Gold as Money 7345. Thanks for the question, Gold as Money. Probably I would just wait until after the Fed's meeting is number one. And also I would want to see like what's going to be going on with earnings season next month. So I might be tempted just to leave it alone for a while and just see are these banks' earnings, are they actually going up as much as expected? Because in this kind of situation, possibly it creates some challenges for the banks. Maybe it doesn't. Let's see. There's something that we want to find out. You know, what are the fundamentals of these companies actually like? And then another question is US 8,000. Sorry, I don't know what you mean. Hang Anthony, US 8,000. Sorry, I don't understand what you mean. US 8,000 for what? For gold, like $8,000 for gold. I don't know, man. This might be a while. So if you could clarify, Hang Anthony. Sorry, I'm just not sure what you mean there. That seems like a fragment. Not sure what you're talking about here. And in the meantime, if anybody has any other questions, please by all means ask. So let's just briefly summarize. So most important factor, of course, is the war, right? So, I mean, it doesn't really matter which news source you want to view to look at the news. Could be any source in any language really that you want that's moderately reliable and provides some amount of detail. Read a bit about the progress of the war. And of course, I think particularly like read about how is Donald Trump antagonizing his allies? What are some of the off-ramps here? Or what are some of the on-ramps to further escalation and all this sort of stuff? How is oil actually reacting to different aspects of news? That's also, I think, a very important factor. And this week, most importantly, we've got quite a number of central banks, very large number of central banks meeting. I think we want to give some focus specifically on surprise decisions, if any, of course, but I think it's maybe not that likely we'll get surprise decisions, but we might get some mention of inflation and how oil is possibly going to influence the trajectory of inflation. And I personally would be inclined just not to trade too much when we've got all these central banks coming up. Seems a bit risky. And I would just remind you here that this is a demo account, it's not a live account. None of this is a recommendation to trade. It's for informational purposes only, not doing live trading. It's a demo account. And hopefully you've enjoyed the stream. I think that's about it. And next week we'll stream as usual with my colleague Andreas. And then I will be back in 2 weeks. I don't know about Kojo, but hopefully I'll try to find out. So hopefully you join us again next week for the stream with Andreas. And if you have any comments, feedback, suggestions, anything like that, you can, of course, leave a comment here, or you can follow on X, drop comments, or anything that you want to do, not just necessarily me, somebody else can follow us on X. I think that's about it. Wish you successful, responsible trading. Thanks very much for all the questions. That was a really good session with a lot of questions. Many of which I think were very interesting. So thanks very much for that. And hopefully it's like that again next time. Yeah. So in the meantime, I wish you successful and responsible trading. Andreas, I'll see you next week and I'll see you in 2 weeks, hopefully. So thanks very much and goodbye.